All right. So again, thank you everyone for joining, and thank you guys for tuning in through a YouTube video. Again, we'll look at the market today. We'll look at major indices. I promise I'm not going to go too long today. I actually do have to be at somewhere in a little bit. So we're going to look at this. Obviously, if you've been following my blog, then you recently saw my article on the weekly chart sentiment. We'll talk about it, and we'll just kind of go from there. Again, if you're here live, if you have any questions about anything, feel free to ask away. But let's continue. So let's, obviously, you guys been following me long enough that I always kind of I want to look at a long-term sentiment first before we get into it, because obviously, the market is going to fluctuate. It's going to have its decline and stuff like that on a daily basis, even an intraday, basis. But really, though, where are we coming from? So we really have to respect the fact that the market is still in a primary term uptrend, right? Are we not? We are still in a primary term uptrend, and we talked about this. But it's interesting. Interesting when we study the candlestick analysis. Obviously, today's Wednesday. You can see that obviously we did close above this kind of important pivot level here. This was an important level looking at the weekly chart. And it is actually crucial that we do analysis on the weekly basis on the market because the fact that we're working with the prolonged uptrend. You know what I'm saying? You can see that we're working with that. So it is very, very important that we understand where we're coming from, looking at the weekly chart, and then you want to zoom in, and then you look at your daily chart as well, right? So when we look at a weekly chart, obviously we saw the huge bullish candle there. A lot of times, after a decline like that, what you're going to see is you're going to see a little bit of a kind of a volatility right after the huge bullish move like that. And then you see that we did that. We threw that shooting star a few weeks back right here. Okay, you see that? And then right on that 50 MA, it's interesting to note that 50 MA, this is a weekly chart 50 MA, guys. The weekly chart 50 MA, if you kind of pay attention to that, is very important because that 50 MA, this is pink dotted line here. That's a weekly 50 MA, right? So that weekly 50 MA act as support in the past, and then it turned around and act as resistance. This is the important part here, because if this market is gonna roll over, many times what's gonna happen is we come down and make a new low. And that's what we call lower lows and lower highs. That is a cultivation of a downtrend, inauguration of a downtrend. Obviously, well, we didn't do that. Instead of putting a lower low, we actually put in higher low, and then we're back at that 50 MA. Obviously, looking at this weekly chart, we're seeing a little bit of resistance there. Again, why are we seeing resistance there? Because obviously it has been acting as support in this vicinity. So people remember that. People remember this vicinity, right? So this is an important level that we're dealing with, and currently we're just kind of sitting right on there. But as far as the sentiment is concerned, it's interesting to note that it's very, very similar. I mean, looking at back in 2011, do you see that wick right here? Do you see that? So we had hammer, right? And we saw a gap up. Again, this was back in October 2011. We're just kind of comparing the sentiment because we have a very, very similar sentiment to back in 2011. So we're just going to look at that and see what we can find. And then, here, let me zoom in here. And then what we have, it's very important. If I just go like this, obviously this candle is a finalized candle, right? That is on Friday, on that week, end of the week, that's what it printed. But do you see this, that wick? Just that wick. That means during the day, right? Or throughout the week, maybe Wednesday or Tuesday, whatever, this looked bearish. And then obviously Thursday, Friday, we came back up, and it closed above that 50 MA. And then we were able to get back up one more week. We pulled back. Obviously, the reason why he pulls back is, well, you gotta keep both sides honest, right? The bears, right? The sellers gonna feel like they are right. that this thing is going to continue to cultivate lower highs and this thing is going to go to nothing, right? And then possibly put in lower low. If they did, that would have been a downtrend, establishment of downtrend, which we didn't do that at the time. What we did though was it created a higher low, and then that was a reversal. Let's look at today's sentiment. Obviously, when we say history repeats itself, does not mean that it's going to happen exactly the same way, and we have to understand that fact. But a lot of times it helps to understand because, traders and investors tend to react certain way and when the certain thing happens in the market, right? We had a pretty abrupt sell-off, and then the traders, investors with fear and panic and things like, and greed also at the same time, because there are people here think that it's very, very cheaper here. Stocks are cheaper at this level, so people are wanting to get in a little bit earlier. Or people are very panicky right now, very fearful, so they want to get out. So this is why we're seeing a lot of volatility in this vicinity. So when the market sees this kind of a climate, there are certain things the market is going to react. The traders, investors react. That's kind of like our human way of reacting to certain situation, right? If I give you an example, like, just for you, like if you're having a bad day, you're sad, you're depressed, there's certain things you're gonna do. You might go get some drink, or you might, order some pizza, you're gonna pig out, go to Chinese buffet, or whatever, right? And there's certain way we deal with things. The market kind of does the same thing. Obviously, the market, whoever trading the market, they're human beings. So we're similar in that, and that's why, I study a lot of the historical sentiment, kind of use it as a reference point. It doesn't mean that it's an absolute. Nothing is absolute in the market, obviously, and we all know that. But able to understand the psychological aspect of it, that could help us to gauge, and engage what could possibly be coming down the road. So, obviously we did that. We had a very similar sentiment, a huge bullish day, came down, a lot of volatility there. We threw a hammer right on that support level there, and then we got that gap up, and then we saw follow through last week. And then today you can see that you guys see a little bit of a red candle right on that 50 MA. And obviously, we're just kind of you could say that we're possibly testing this support, that pivot as a new support. We're not sure yet at this point. We'll have to see how it's going to close this week, end of the week. This was acting as support in the past. It acted as resistance prior, maybe several weeks back, and is at a retest before going back up. We're not sure. We wouldn't know until end of the week, and then we can able to assess the situation again on Friday after the close and see what happens to it. And obviously, if we just go through every single indices here, they all look pretty much similar. They're pretty much giving us all similar sentiment, that we have that bullish reverse or bullish uptrend support there that has, that we click there, and we have that candlestick analysis. You got a hammer and a follow through and a little bit of decline there on the Dow Jones. If we look at Nasdaq Composite, also pretty similar there. Actually, if we look at Qs, it actually works better if you want to draw your trend lines. Sometimes in Qs and Nasdaq, they, you can see that Qs, you can definitely have a very well respected support there, right? And then we're seeing the little bit of just kind of a little bit of a decline there. Nasdaq, obviously, Nasdaq, we can't quite hit it because that's what did in Qs. It came down, hit that, but that's kind of what we're seeing right now is exactly same thing there. Looking at Russell 2000, again on the weekly chart, what we are seeing is obviously again that uptrend support respecting this level so far. Yeah, we're not sure if this is going to be a bottoming pattern before going higher or if it's going to continue low. It's interesting to note that you just keep an eye on that hammer there on that weekly chart, because that's exactly what we saw last time. We hammered right about here again. Because it happened 2011, is that going to happen here? No. But if with the proper follow through, the probability increases, right? The probability of that follow through increases at this point. So that's something that we want to keep in mind. It's interesting to note that semiconductor actually had a bullish day today with the 3.76% gain, while the Russell had a 1% decline. The S&P 500.5 there. But again, if we go to actually semiconductor on the ETF, you can actually draw that in right there, uptrend support there. Semiconductor, This is important level right here. We're trading right at this level. I know a lot of probably this is where the seller's gonna come and say that we're probably forming some kind of a massive inverted head and shoulder before correction or even a crash, and that could possibly be. However, there's always gonna be assumption. There's always gonna be allegation, right? I mean, we could have said the same thing back here. So you really can't assume anything until we see certain, price action confirmation, at least initial confirmation. So, because I mean, you could have said same thing back here. It will make it a little bit more realistic if I just do something like that. Got a left shoulder there, head, and this looked so much more symmetrical actually back in 2011, 2012 there. But obviously, if you look at this, it really never played out. Really didn't, and we continued higher. Look at this. After this was nullified, right here, this was your entry point, and you could have really rallied it all the way. So obviously, this is where people are gonna say that, hey, there's some kind of head. Again, I don't want to get into assumption right now until I see coming to fruition or something like that. Something at least put me get into a lower low, lower high. So what I'm trying to do is at least I want to give benefit of the doubt in the market in the long term, with the weakness in the short term, and with the kind of a neutral basis on the intermediate term. I hope that makes sense to you guys. Let me look at this time's, let's look at a daily, more of a short-term sentiment on the S&P 500. We'll be using, for the daily sentiment, we'll be using the spiders and diamond and the Qs and so forth, right? So looking at a daily chart here, you can see that obviously, on the Dow Jones, or I mean S&P 500 here, this was an important level that I've been talking about, right? This is a level that I've been talking about last couple months, or at least last month or so, that this is a level that you want to see at least the price action reclaiming that level, right? And this is a level there, okay? And we got up. You can see that. What happened was that 50 MA act as resistance. We threw that. This is a Fed meeting day, and we threw the big shooting star candle there. We had a gap down. Still, there's a lot of panic in the market. Came down through that, long high wave, a doji gap up. This was a morning star reversal, evening star reversal. Got back up. And this time around, what it did was it reclaimed that 50 MA. We actually had a 1 day of pause, or a little bit of selling day right there, right on the 50 MA, right? Because people are a little bit, cautious, because hey, last time we threw that, we hit that 50 MA, the market kind of tanked. So this time, I want to be cautious. So the more of a short-term traders, they became cautious there, but we kind of made through it. We got up and kind of got back to the kind of this resistance right here. And then we're still seeing a little bit of a selling action there. Right now, it's tough to say what this is gonna be. This could become a bull flag before going higher, or we could just roll back over, and then volatility continues, right? And then we could just do something like that. So we wouldn't know right now. But there are supports. There are a couple supports that you want to watch on the spider. Is that right now we're currently hanging around right on that 50 MA. 50 MA did act as resistance, a pass, and it could act as support. We're not sure yet as of today. We do have 10 MA there. We do have 20 MA there. We do have a gap right here, right? A lot of times a gap area can act as pivot or support or resistance. Okay, so there's a question here. So during the Fed's August sellout, there was a massive volume traded. The rally lasted 8 days, was on very low volume. Would this qualify as a bull trap? So I think what he's saying is, what this person is saying is obviously, it rallied. There's a low volume. So is this a bull trap before going lower? That's a very, very good question. If we obviously let's this is a back in 2007. So if you want to get certain idea of how the market crash actually happens. Obviously, we need cultivation, right, of a lower lows and lower highs. You can see the lower highs there. So, I mean, if you're thinking that this is where we might be, right, this is, well, maybe this is where we're at. Maybe it's going to go up and then hit, it's going to 200 SMA, and then we're just, you know, that is a possible scenario. But we have to understand for the fact that we confirmed this head and shoulder formation with the lower high, right? That's a lower high. That's a primary term lower high, and a lower low confirmation. So today we really don't have a lower low really quite yet, in my opinion. I think if this thing comes down and makes new low, I think that would be the cultivation and inauguration of a downtrend, right? So this is where I'm saying is that this is a kind of a make or break level. We've been in that make or break level quite some time, since like August, right? So the question would be, because we could say the same thing here back in I don't know, back in 2011. I mean, obviously you could see that volume has been declining. I mean, you see the indices though, the volume, I don't put too much weight on it. On the individual equities, I do. So just kind of trying to ascertain markets movement on a volume is kind of tough to do. Obviously, you can see that volume has been declining, even right here as it was going up. We couldn't say that this was a bear or bull trap. We couldn't say that, right? Could we say that? Obviously, this time was actually a little bit more dire situation. The reason is because we had confirmation of this head and shoulder formation. Not only that, we put in newer lower low. So right here. And so this looked like a massive bear trap right here. So you're gonna talk about traps. That was a massive bear trap right there, because a lot of people are looking at market crash back in 2011 right here. This was when it made a lower low with the lower high. Look exactly the same as 2008 correction, or the crash, right? 2011 crash or 2008 crash, and then we have a very, very similar sentiment here. And then we got up, and then we made higher high and higher lows, and that was the end of it. That was the end of it. And then that was, obviously, this was here a massive, a bear trap. So it's a bit early to say that this is a bull trap. I can't put too much weight on the volume itself, because a lot of times, it's not really relevant as far as the indices are concerned. The volume is not relevant, because if we just go to monthly chart, guys, we've been pretty much rallying without volume, and so you can see that the volume's been really just been declining the whole time. So I mean, you could say, hey, because of that, there's no volume. Hey, market might crash, something like that. But again, volume was rising at this point. It's slowly though in 2000. 2000. So volume is very difficult to forecast the market just using volume there. You can see the volume was rising, but then yet a market crash. Obviously here up here, there's a buying volume right here. I mean, you can see it looks like this was continued, but a lot of times what happens is that you don't want to see a lot of high volume after a move like this. Many times, if you really study volume, many times that could actually forecasting that that's like a final push, like the buyers are putting everything they got, and then they ran out. They ran out of things to buy. Like they just went all out, and then bears take advantage of that. I think I did that analysis on Treasury bond as well. I remember we're looking at Treasury bond. Here, I'll give you a good example of that, because that's a good question. A lot of times, here, let's go to weekly chart. So you guys know that last year I was trading Treasury bond. I wonder if that was the case or not. Maybe not. Maybe it was something else. Maybe I'm getting a little bit confused with something else here. I think I am. I don't think it's Treasury bond. It was something else. So a lot of times what happens is you get a bullish move, and then you get a huge bullish day, and then you get a big volume up after a huge bullish move like that. A lot of times that could be where it's like a final push. But anyway, so let's go back to it. Hope that makes sense though. So I wouldn't put too much weight on the volume at this point. I would put more pressure, or I would put more weight on the price action. I'll really I would really look at weekly chart. and then on the daily chart. So in the weekly chart, obviously we just looked at it. As long as this thing continues to, I mean, even if this thing comes all the way down, but if this thing fails to make new low, and then if this thing start doing this, and we start creating this kind of a just very agitating, you know, higher lows and higher high, because this is where it's gonna frustrate both bears and buyers. When it just goes up and down, up and down, up. Because bears thinking, every time when it comes down, bears gonna think the sellers think that they're right. So they're gonna keep waiting, keep waiting. Buyers gonna think that they're right, so then they're gonna keep waiting. So then waiting, what happens is that they start to get momentum. Because we're in a primary term uptrend, once the pricing start doing it like that, it actually favors the buyers. The longer it stays, because the seller, the bears, they don't want to hang around. That's not what they want. They want to flush it down. That's their characteristic. The longer it hangs around like that, it actually favors the buyers. Actually, like right here, the longer it hangs around, what bears want to do, even here, it looked like it was going to do something like here. This was back in 2010. Just, you know, left shoulder head, right shoulder. This is a massive, massive bear trap. Looked like this was going to be a confirmation of head and shoulder and do nothing. And then we hung around, and then you get that, right? That reversal. But if we look at, you know, market crash here, obviously, it gets things done pretty quickly, right? It you know what I mean? It's gonna get things done. It's gonna come down. It's gonna go up, come down, go up, come down, go up. But then it's making that lower low, lower high, lower low, lower high, which is a, you know, inauguration of a downtrend, right? The establishment of downtrend. So the sentiment, right? The psychological sentiment of it, in understanding that is very, very important, especially when you're doing analysis on the indices, right? Especially when we're dealing with this prolonged uptrend. Right, so at this point it's difficult to say that it's gonna be a bull trap, because I don't think a lot of people think that this is. I don't think that a lot of people think that this is a reversal. I have a, because just from the sentiment that I get from the, you know, the blogs I read or tweets or you know looking at, you know, watching news and stuff like that. I think people are just very, very panicky here. You know what's interesting about, you know, I think I talked about this last week. It's interesting about that is that people like wants to see market decline so that they could finally get back in, because obviously, you know, the market, you know, was due for one. Obviously, you know, I never use language like that. Market is never due for anything. It's gonna do whatever it's gonna do. Because the market was due for a correction here, and you never got it. It was due for here because I've been hearing it. Due for. So finally, we get very, very steady decline. Because last time we got it this, and it looks like it was going to do nothing, and it didn't continue higher. So it's interesting to note that psychologically, as a human being, we want to see market decline so that we can get back in. And then when it actually does decline, we're fearful, right? So we're fearful to go in. So it's one of those, that's why it makes trading so difficult, because of the emotional aspect of trading there. That's why I gauge, I look into the sentiment of the market, right? I look into the sentiment, the psychological level of traders and investors, which is very, very important. So obviously, we talked about weekly sentiment. We're just looking at daily sentiment here. Again, it's very, very difficult for me to say that we're going to bounce from here. We could just plunge and come back down here. We could just plunge and come back down here, and we could just keep doing this. But if we find support somewhere here this week, we might even come down, even fill this gap. If I threw a little bit of Fibonacci, if you want to do a little bit short-term, you know, support and resistance levels, or you know, support levels. So if you know, either Fibonacci right here, this is more like a, you know, minor to intermediate term support level. So this is what I call FRZ. This is at Fibonacci retracement zone. So what it is saying is basically you wanna gauge kind of a minor, intermediate term, higher low. As long as it stay in the zone, and then if it bounces back up and creates a higher high, that will be considered as a higher low. Okay. So then we got low there, we got higher low there, and then we got higher low there, and then we got higher high there. Then that could potentially be that kind of agitating pattern where this is where it's gonna fake everybody out. A lot of sellers are gonna continue to stay in it because of kind of a sharp pullbacks that it's gonna have. Because, you know, sooner or later it's gonna just plunge. That's what they're thinking. It's gonna plunge. So this is the market where we're gonna see a lot of buyers and sellers kind of you know, going back at it. That's why it's important that we gauge things in a weekly chart term, the long-term perspective, right? Because then we don't, we're not gonna ignore on a daily perspective. It's just that we're gonna understand where we're coming from, where we're going. So obviously, you guys know where I sit in the market. I think the market. Obviously, I need more confirmations. I do need more price action to confirm my thesis. But I do think that a market is gonna reverse back up. But does not mean that I'm gonna be 100% right about it. But you guys know my view on that. Yeah, for the last 12 months I'm not making money because when there are not more investors buying more on the economy. So if we break 187 plus, although they're holding 1%, wouldn't this cause a sharp drop? You have people buying Spider for the last 12 months. So then if 200 MA now more investors buy more decline market, so it's a break 1867. 1867. Yeah, of course. I mean, so that's kind of what I'm saying is, of course, yeah. I mean, this is gonna be a panic level. So I talked about it. So this is gonna be a panic level, right? Once we get below this, people gonna start panicking and people gonna start selling. And this is probably if we get any below 1867, right? It's probably going to be where we're getting into market crash mode. Very steep decline. But we're not there yet, though, are we? So that's kind of my thing, is that I always do my analysis on tangible data, not data that is not there, right? So, because we could have done the same thing back here, that, hey, anywhere below, 1120, this was back in 2011, anywhere below 1120 would be a panic level. And that's true. But a lot of times, obviously, you gotta, sometimes this market loves to fake people out. That's how this market is designed to do, fake people out. Same thing happened here. We could have said same thing back here, right? Anywhere below 1048, it's gonna be a huge correction. Well, it faked people out, got back up, and then it continued higher. So my thing is really, there's a tangible data. Do we have a tangible data that market is gonna, we don't have the tangible data yet, because we faked out, players here, we faked out players here, and it doesn't mean that it's gonna fake out players there. I'm not saying that. It just, I want to see it. I want to see a price action actually first, confirming that, and then possibly we can get that, market could potentially be getting more decline. So if we break this low, where does that spider go to? Actually, it's not so different as far as sentiment. Yes, obviously we rallied so much more from that point on, and so maybe you're saying because we rallied much higher, that there's more, there's more percentage or probability that it could continue lower. That's not actually a good logic to say, because obviously, market went up here too. I mean, if we just look at Dow Jones though, I think I did a long-term analysis on this. Just because a market's been for so long, it doesn't mean that it has to have, again, if you look at this here, from 1982, 1990, it's just, we get declines in between. This was a pretty ugly one, but you see it. Just because it came from here doesn't mean that it has to have a deeper decline, right? Doesn't mean that. Just because it had an 80% gain doesn't mean that it has to have a deeper decline. Obviously, with the price action expanding, that's why a lot of times they use a log scale and stuff like that, to accommodate a certain price action expansion. But if we do break below, this level though, on the spider, and I would have to make sure this market would love to have, you know, fake out and stuff like that, but I would have to make sure that it is continuing. Then perhaps there are certain supports here. We got 180 to see, and then after that will be 174. I mean, you can pretty much go down these support levels, right? You can pretty much go down these support levels. And then as long as it's continuing to cultivate, you know, lower lows and lower highs, that will be a downtrend. And trend will continue. $2,000 years, top was never tested. 2000 and 2007, top was never tested. What does that mean? 2000 top was never tested. Well, for sure we cultivated lower lows and lower high. This is a downtrend right here. That's a lower high. That's a primary term lower highs right here. We got low, we got high, we got lower high, we got lower high, we got lower low, and we got low. That's a lower highs and lower lows, and then we crashed. Market is not gonna just come down straight down, right? Same thing happened 2007. You got a lower high there, lower lows there. Today we got low, we got high, we don't have a lower high yet. And this could be a lower high, right? We don't know that yet. That's what I'm saying. So again, I need a tangible data, right? We don't have tangible data, then it's just assumption. It's all just allegation that it may do something, it may not. So I always kind of lean on where the trend is at, and then once I see because I mean, again, obviously you guys respect Dow theory, right? Charles Dow, one of the theory, he says that the trend is assumed to be in effect until it gives us clear signal that it has been reversed. So trend isn't assumed to be in effect, until it gives us a clear signal that it has been reversed. You know, we did see a very sharp decline. We do not see, again, I've been harping on this, we do not see a clear signal that has been reversed. Minor term, yeah. Intermediate term, primary term. Let's talk major primary term. We don't have it yet. Can this be something like this? Possibly, right? Can this be something like this? Possibly, right? Possibly. And then can this come all the way down here? Possibly. We're just assuming things without you know, price data to confirm anything, right? Because the weekly chart I've shown you, we actually have a price that actually something we can see, right? So, but once we start to see some lower lows, then there's a cautionary signal. Then you must get out of the market completely. Then there might be a huge steep correction. I hope that makes sense there. And we're up here, so I think, you know, obviously it could come all the way down here, but I think it could be a problem on the spider if we get below 188. And then we do something like this, come back up and retest this as old resistance or old support become a new resistance, and then pull back. This might even be where you could even short somewhere here. But I wouldn't be hasty right now. There's on the weekly chart, especially if we look at NASDAQ. So NASDAQ, we clearly have, oh, it's not so much higher low, but looking at candles, we are already cultivating higher low without really any kind of topping formation. Though it could become something here if this thing does not get back up and this thing comes down here, obviously then, you know, it could do something similar to spider that I just talked about. What happened to my chart? Oh, there we go. So there's going to be, you know, obviously when we look at the market, there's going to be a lot of guesses here. There's going to be a lot of people think the market is going to bounce and start buying here. There's some people who are gonna think that we're gonna market crash. We're gonna start selling here. So there's gonna be a lot of guesses go in both ways, and that's what we're seeing volatile market. And so when we see a little bit of decline, people are gonna start selling it. When we see a little bit of bullish move, people are gonna start buying it. And but then these people are pretty short term because they're very, very cautious in the market. So that's why there's a lot of volatility, because these are not people who wants to do things long term, because they're just seeing it, what's going to happen. Because if the market continues, they're going to hold it. If not, they're going to exit very, very quickly. So that, again, this is why the market is going to start to see a lot of volatility there. All right. Russell, I just want to do a quick this is Russell here. We haven't seen bullish divergence quite some time. On the Russell 2000, actually this is the first time we're seeing bullish divergence since back in 2011. Again, when it comes to sentiment, it's interesting that these oscillators kind of will give you similar sentiment there. You can see right there and right here. So oscillators also giving us very similar sentiment there. See, when I do my analysis, as you can see, I do my analysis based on the data that is already there. I hope you guys kind of realize it. Instead of me just trying to predict everything, because okay, what you see right now is the data is currently there. Obviously, we haven't seen price action getting new highs, because the last time, we got up, we pulled back, and then when we started getting up, this was a bottom, and we did that. Does that mean that that's what's going to happen? No. But we are seeing certain similar indications, similar price action. So then that's kind of how I think a lot of people, like especially new people just getting into technical analysis, they'll use it to predict things. And that the reason I know that is I used to do that. Like I'm going to predict it. Like, you know what I mean? But if we can use a tangible data, the action that is happening, and do your analysis based on the data that is already there. And obviously, forecasting, predicting is part of our game. That's what we do. We because it's a probability that if certain thing confirms, we forecast the market is going to continue higher. Certain thing confirms the level, the market potentially go lower. If there's the establishment of a downtrend, then we forecast and predict the market is going to continue lower, and especially we might even get into a correction or crash. But if we stabilize here, start to cultivate higher lows, higher highs, then I can forecast and predict the market is going to continue. Obviously, that is what we need to do, but it has to be based on. It has to commence from the actual data that is at hand. So when I look at this Russell 2000 index, when I'm giving you this, this bullish divergence signal, though it hasn't been fully confirmed on the price action, because we need to get above this resistance right here. Because we have oscillators start confirming, but we haven't seen price action confirming, right? So what does that mean? When is that confirmed? You might ask. It's when we make price action make new highs, and this is where it's very, very important. A lot of people tend to call market traps and stuff like that. So let's do this. Looking at this in 2011, October 27, do you call that a bull trap? Because it will pull back? I don't think so. I don't think there was a bull trap at all. I think market is establishing its inauguration of an uptrend. I don't look at that as a bull trap. Only short-term players will look at the bull trap, because short-term players, what they're gonna do is they're gonna short here. They're gonna short because they're gonna look at a bull trap, but it's a short-lived. What I see is this. High, a higher high, low, a higher low. What I see is this, inverted head and shoulder. But in any case, that is a higher high. So what it needed to do when it pulled back, we just needed a higher low. Because what is a definition of a downtrend? Lower lows and lower highs. That definitely is not a lower high. Though, if this thing continued lower, that might have been, but it didn't. It created higher low. So the ultimate question is, was this a bull trap? No, it was not. If anything, this was a bear trap right here. That was a bear trap. You see? we see what we want to see. If you're a bear, you're gonna look at that as a bull trap. If you're a bull, you're gonna see what I see. But it's important that as analysis, not analyst, you and I, technical analyst, we gotta be fair. We gotta be reasonable. We can't be biased. Obviously, we are emotional beings, so if we're long on the market, we really want to see bullish, data. We really do, and so that it hinders us not to see bearish data. And that's the hardest part you must overcome. Is that as a technical trader, what you want to overcome is that even if you're long on the market, you must look at both data and come up with a fair assessment. A fair assessment. So that's what I'm trying to do. Is I'm trying to give you fair assessment on the market with the given data. So looking at this here, right here on the Russell 2000, once it gap back above this level here, probably like 1185 or so, we get up. Even if he pulls back a little bit, if we continue higher lows with that bullish divergence, which sentiment tells you that we're very similar there. It's interesting to note that we also have that sentiment on S&P 500 as well. It's not, perfect bullish, perfect textbook divergence, but oscillators think so. On the price action, it's not. See that? Price action, we actually did not make what? We did not make lower low. We actually made an equal low. The textbook divergence is what? Price action making lower low, oscillators are making higher low, right? Higher low. Exactly what happened here. So you can see that what I'm working with when I look at the market, I work with the tangible data first. Because this isn't I haven't given you anything that I don't see. So this is a tangible. And so what I do is I take the tangible data and put a little bit more weight to it. And then I do other analysis like, okay, potential things that could possibly happen. And it's all you gotta keep that in mind as well. There are certain bearish, there's bearish signals. And as far as the bearish signal is concerned, on the market is that we like I said, like this guy said, that we are dealing with a prolonged uptrend, and then maybe it's too much up. Maybe it is due for a pull, but maybe it's due for a crash. Maybe the Fed's raising rates and everything else. All of that. The world is not doing well. All that other stuff. But it's just all those news and all those things. Obviously, it's just could be somebody's opinion. It's arbitrary, right? It's arbitrary. Somebody thinks. So then I let the price action dictate where the market is going to go. So we just looked at that, looking at different indices here. So again, long term, I still want to keep an eye on the weekly chart and then go from there. In a minor term, looks like there's some fear kind of getting back into the market that could potentially gap back down to some of this level, this Fibonacci retracement zone. But we do have support work in some of these levels, so that's the level that we needed to see. And then definitely though, I don't think that market sentiment is going to change on a daily basis. So what I really do would be looking at things on more of a weekly term and then go from there. Any final questions on the indices? Alright, so let me know if you guys want me to look at any stocks or anything like that. Any stocks you're involved in. Any sectors or something. But I'll go ahead and look at Apple here. So Apple's just been really laggy here. I know what many people are watching it right now. It's right here. Left shoulder, head, right shoulder, right here. Left shoulder, head, right shoulder, right? Tanked. So we're gonna tank. Maybe back down here to 200 SMA, right? Because last time we did find a bounce on that weekly 200 SMA. I remember I wrote an article on that. The Apple potentially be bottoming here, and then because of 200 SMA and other things, is that possibility we come back down here? There's a possibility. It hasn't confirmed yet. We did have the difference was that we had a very strong bearish divergence on the weekly chart on Apple. If we go to weekly here, a lot of times that was a very, very strong bearish divergence there, and you see it just not the same. RSI we might have a little bit, but it wasn't quite. This is just crazy. I don't think I've ever seen something this strong. That's just craziest bearish divergence that I've ever seen there. So we saw that. If you look at candles with an evening star reversal there with head and shoulder on a daily chart, and everything was crazy. We just don't have that. So a lot of people ask me why I'm not bearish on Apple, because I mean back in 2012 I was very bearish. I was extremely bearish on Apple, and so I get a lot of emails and things, and so why am I not bearish on Apple with the similar action? It's just because, first of all, when I look at a weekly chart, this candle, this guy right here, that guy's still in charge as long as it's above 50%. We really didn't have anything like that back here. It just was like a bear flag right here, and then bang. And again, we had a what? Weekly bearish divergence with an evening star reversal. You see that star? That's an evening star reversal. We had an evening star reversal daily, weekly, and monthly. And with a head and shoulder on the daily. We had a head and shoulder on the weekly. So we had so much more topping pattern here than here today. The only thing we have right now is just that decline and potentially weekly, weekly head and shoulder. But really, this guy is gonna just ruin things for the buyer or for the sellers. So if you're doing your candlestick analysis, when you see kind of a big candle like that, so think of it like this: if you own a company, as long as you own 51%, you can control that company. Right? You know that, you understand it, right? Somebody owns more than that, then you can't control it. It's kind of like a candle, big candles like that. As long as it's still above 50%, this candle's still in control. And obviously, this can go wrong. That's what my thing about it is. Let's not assume things yet. Let's not assume. Let's talk. Let's think about. Let's work with the tangible data first until it breaks. Because we're talking about probability there. So this is a important level to hold, obviously on Apple. If market reverses back up, I think if Nasdaq reverses, if the market reverses back up, I think Apple could gap back up here. However, we're just dealing with now we're dealing with, if this thing gets below 107, things gonna get very, very complicated for the buyers. If we get below that, because then we're gonna deal with lower highs, though and then a bit of a lower lows there. So things gonna get very, very complicated if we get below 108 or so. I think we need to try to stay up here, 105, 108 or so, this level. If you're not long, I wouldn't bother to go long until it gets back above about 120 or so. This is a level that I think where the market or the Apple could reverse back up then. So we're still in this vicinity. We're just trying to find, we're still trying to find some ground there. But as far as the sentiment is concerned, it looks bearish. Daily chart, it looks bearish in the minor term and intermediate term. The sentiment is definitely bearish right now because we have declining 50 MA. It acts as resistance here and here. We have declining 10 and 20 MA. 100 and 200 SMA did cross. So it's making things a bit hectic, on that. La 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 la. Got it a couple times in week, 20% below all-time high. Yes, that's what. Yep, you're right, very much. So obviously, so only thing that, as far as a bullish data is concerned, only thing that, as far as a bullish data is concerned, only bullish data that we really have on Apple is really that big candle. That's it. That's the only bullish data we have, and it bounced off the weekly. So only thing bullish that looks like it's gonna be possibly bullish is the weekly chart. But looking at a daily tangible data, yes, it's bearish in a daily chart. So then which one's gonna win? Obviously, we'll have to see. Anywhere below 116, 120, I think this is where I think, you know, buyers gonna really find some momentum. But anywhere below here, still gonna be a lot of confusion, obviously, and then things can get very, very hectic in this vicinity there. Yes, so that could just like I said, that could possibly be a weekly chart head and shoulders pattern there, and that could gap back down to. So yeah. But another thing I would watch out is in this vicinity here, is that let's say if this thing comes down and then it bounces back up, and if we start doing something like that, again, that could be the possibility. For bearish aspect, we could be doing something like this, right? So my thing is always, again, I want it to tell me what it's gonna do, and then we'll go from there. Let's see, any other one? Should we look at Tesla? I'm still not in. I don't want to be involved in Tesla. I don't think I want to for a while. I just don't like this thing going on. I don't know which one I looked at. I just don't like this happening here. It just seems like we could stay here for a while. If I really want to go long on Tesla, this is what I would do. What I would really, because I'm a patient man, and if you're gonna trade long term, anything long term, you gotta be very patient. What I really want to do is this. I want this thing to have a confirmation of a breakout. But even if it breaks out, I don't want to go long, because there's too much fake outs, especially when we've been dealing with, it could potentially be a channel. I'm not sure what it is. It could just be something, you know. So what I want to see is this thing breaking out, and then if this thing pulling back and retesting the resistance as new support, and then bouncing back up. That's where I would like to go long. The only process I would go long on Tesla is that. That's it. Right now, no. Unless, again, because I don't want to trade here to there. You know, you might want to. I want to ride this, you know, a trend, maybe even possibly to 400. But right now, it looks like I've seen stocks do this, where they get kind of this very, you know, hyped up move, and then they stay in this range for really, really long time. And you might even can trade that up and down, actually. If that's the case, you can probably look at your oscillators and trade this up and down, though it's not going to do it perfectly, so you'll probably get in here and get out there, you know, but I don't like trading that short term that much. That might be like a couple of weeks of trade. So I just really don't like that. It's iffy for me. I mean, if you put a line chart, it's just like, what the hell is this? Like, it just, I don't know. So I really don't like Tesla here. It just came, that's what it does. It goes up, it comes down, very, very hyped up, emotional stock, like it will do stuff like that. So I just kind of get away from it. As far as the sentiment is concerned, it's a bit, you know, we are cultivating lower high here. We haven't cultivated lower low, so it's just we're just a bit of bearish pressure. Probably come back down to this level and then possibly get up and then do stuff like this. It's just gonna be all over the place. I really don't like it. You know, I think should we look at Google, and then if you guys don't have any questions, we'll call it a night. I like Google a lot. I know we have earnings coming up. I really think, you know, Google's you know, maybe $800 stock. I like some of these breakout retest kind of thing. Here, let me just do this here, make it a little bit better for you. So we got resistance and a breakout and a retest and then a run. Resistance, a breakout, retest and a run. Resistance on a retest. We broke out on earnings, last earnings, and we're in that phase of retest and then possibly getting back in there, right? So you can see right now we actually got above right here. This was important level. What does that mean? Well, we're cultivating something. What are we cultivating? Well, this was a low or high, and then that's a higher high. This is low, that's a higher low. So if we just look at this right, this sentiment here, minor term, we're cultivating something here. Higher lows, higher highs, a little bit of bullish uptrend. And you could always say that, well, okay, we're coming down like this. That could be lower highs. It could be, but obviously, you know, that we haven't cultivating lower lows yet. So that's not really cultivating downtrend. So minor term looks to be kind of a bullish sentiment right now. So we'll see about that. Facebook, Amazon, Google. Yeah, you know, Facebook, I traded Facebook like mid of this year, like trade a little bit of that. That's about it. Just right now it's tough to get Facebook and Amazon. Yeah, I mean, Facebook is definitely extended. I don't want to trade. This is why I'm not trading Amazon or Facebook. But you'd be surprised. You'd be surprised. You look at this now, you're like, oh my god, look at this thing. And then as time goes by, this thing like goes up here, and you'd be like, oh my god, I should have bought it, right? You'd be surprised. These can last for a long time. I can't remember which stock it was. I don't know which stock was it. It just seemed like, was it Visa? MasterCard? Or something? All these credit cards. I mean, you know, like this looked like there should be much more downside, and then it just feels like this thing just never ends, right? So if you look at this move, and then I don't know, you know, I mean, that could that be more? I don't know. We don't know. So a lot of times I don't deal with the extended. You know, just because extended does not mean it must come down. It could go higher. A lot of times that's one thing that I've learned earlier in my days is that the market can be overbought for a very, very long time. Market can stay extended very, very long time. Market can be oversold very, very long time, and market can, you know, can be the bottom for really, really long time. And so it's just what I've learned over the years is that respecting primary term uptrend is what I've learned. Obviously, you know, Amazon, if you went long somewhere down here, I mean, that's a great level to do it, and that's exactly where Google is today, right? Same thing here. I mean, somewhere down here, this is a great level to go long. But same thing can be said. It's just that it's just our perspective is always like that. It's like right here. It's like, oh my gosh, Amazon's so extended. I mean, you know, why would anybody want to buy it from here? You know, this thing is just overly extended. It looks like the Amazon, you know, forming some kind of head and shoulder. The reason I know that because I was shorting this, and there are people saying all kinds of stuff, and I wanted to go long, and you know, and then this was like, oh my god, this is so extended. You know, I don't want to buy it here. But can you imagine people who bought it there? You know, they were able to ride that. You see, and so it's always kind of a perspective how we look at things. So our eyes can be very deceptive. We sometimes tend to see things a certain way. So I try to get rid of that, and then like Netflix too. I mean, look at this thing. I mean, I don't want to go long here. I really don't. So I'm not. That's why I'm not really looking at Netflix right now. I'm just thinking, gosh, I should have went long here. and then ride it up, but I didn't. It's always easy to say I should have done something. You don't ever do it, but it's the same thing here. I really didn't want to touch it back here just because I'm like oh my god, like look at this. It's like this after that move. I mean, what is that thing? I mean, that thing is gonna go to nothing, and then it just keep going higher, and then now we're like they had a stock split, and then now it actually is not too bad for swing trading. Actually, it's not too bad going long. Somewhere here it looks like if we can get back above that, could even get back to, if I do a little Fibonacci. Actually, Netflix looks like some of your targets up here. It's not a bad setup. Actually, I might look into it. But it's crazy. There's a one stock I saw. I forgot which one it was, man. That thing looked like it was doing this, just like a whole time. But obviously, not all stocks gonna be like that. But it's just, isn't that crazy? Like, if you just look at this on Netflix, I'm like, yeah, that thing is topping out. Like, yeah, Netflix is topping out, and then like we crazily do this. I mean, that right there, you can actually do a measure. This is how I do my target analysis a lot of times. It's one of the tools that I use. Measure that move on a breakout, measure that. They're almost identical. So if you did that analysis, you went long here, even right here, I mean, you're able to get a little bit of that. So that's why I always start to look at a long term there. But I didn't like it. I didn't like this. So I didn't go on. I didn't go long. Lastly, I want to look at utility sector. I don't know if you guys seen my article on it. And then we'll end the video. Here, let me show you this real quick, and then where is it? This is a site. I'm sure you guys been here before. Oh, there you go. Argument of the bulls and bears in the utility sector. I'm watching this because, again, obviously this is a bullish argument. Hey, we have a horizontal support there. Hey, oh, there you go. I can make it big. So I'm watching this. I love setups like this actually because it pulled back, right? Because we just looked at Amazon, Netflix. I'm like, hey, we should have gone long. We didn't. Right, so there's always going to be other setups. It's okay if you missed entry or something. There's always going to be other entries. So right now, I'm thinking to myself, okay, we got the horizontal support, and then we got a rising uptrend support. I mean, if we can find a good setup here, there potentially be another run, right? Because I mean, obviously, you want to go long here, you want to go long there, you want to go long here, and then possibly another opportunity there. But there's a bearish argument right here. This is a bearish argument. Left shoulder head, right shoulder, confirmation, tankage. So we got left shoulder here, head, right shoulder, confirmation, tankage. Yet we don't have confirmation. Ever since then, though, since this article, where we have gone up. And then I think I looked at 65-minute chart and looked bullish in kind of a short term there. And so above 46. Above 46 might be a good level of entry there, but just keep in mind there could be some fake outs and whatnot, and so you got to understand. And obviously, this here, right there, right? This was an entry there, went up. If you were able to hold through this, because let's say you're like me, you're a primary term uptrend guy, you respect the primary term uptrend, you'd be like, hey, yes, they wiped out all my gain that I held through for 3 months, wiped out all my gain, but I'm going to hold through it. Why? Because I have higher lows and higher highs intact. Primary term is still intact. We have a primary term uptrend. I'm going to hold through it, came down, went up, and you closed most of your positions. You banked. A lot of times that's what you have to do. There's going to be a time where if you're doing a long-term trading like me, there's going to be a time where it's going to wipe out your gain. But if you understand the primary term uptrend perspective, you can aim to gain that. So it's never going to be easy, right? But I'm watching utility sector here. What's the energy doing? Yeah, energy's no. Definitely no. Oil? No. I read an article on oil. We had a just massive bullish divergence on the weekly chart. That could potentially be something, but I did say that it's a premature. We need a confirmation on the price action, which means it gets back above here. It could even be head and shoulders, who knows, right? But no. Well, that's about it, guys. You guys have any questions about anything? It looks like, it seems like everybody's a little bit like kind of fearful of the market. I can tell because I get like, you know, these like live events, I get low attendance when the market is like in this, and then the market is like in a bullish uptrend, and there are more people like, hey, I want to come and see what he has to say. But you know, I don't know. Before I here, let me do this. I'll just finish the video here. Actually, I'll just